Well, I would point to two things. I think the first is the housing sector. Historically, the housing sector has been one of the most important sectors leading the economy in a recovery. Housing, during a recession, interest rates drop, housing gets cheaper, and it tends to lead to stronger demand and a pickup in activity and a pickup in new construction pretty early in the cycle. It usually leads the economy out of recession. But because this recession was caused by a collapse in the housing industry, housing didn't lead, it lagged. So we're just starting to see the housing sector begin to pick up. And the other thing I would point to is the pent-up demand. During every recession, there is a tendency on the part of consumers to not buy new durable goods, whether it's a new refrigerator or a new car, but to repair the existing one or to put it off until they have more confidence in the future. Certainly, the overall recovery has been one of the slowest on record. Partly that's a function of the fact that the recession was extremely deep. And partly it's a function of the fact that the economy today is very different than it was, say, in the 1970s, the 1980s, the 1960s, et cetera. The structure is more toward services, less toward manufacturing, and that tends to affect the speed of recovery. More service industries tend to recover more slowly. So, that's part of the reason, but I think also the overhanging uncertainty of what's going on in Washington. And I would add one more thing. In this recovery, just as things look like they were starting to come together, we saw a lot of our major trading partners in Europe go back into recession. So the Eurozone debt crisis and the subsequent recession that caused also did not help the U.S. and in fact hurt it a little bit. It caused our exports to decline, and it had an impact on confidence of businesses here in the U.S. as well. Less confrontation in Washington will give businesses more confidence, I think. And as we go into 2014, they'll start to act on that confidence. They'll stop worrying about holding down costs. They'll start worrying about losing sales. And as that occurs, we'll start to see employment accelerate, and that's what will drive GDP growth higher.